Welcome to The Explainer. Today, we're diving deep into the pretty shadowy world of wash trading. It's a high-tech financial crime that's all about creating illusions to steal, well, millions. Okay, so let's start at a crime scene, a very recent one. Back in October 2022, a trader named Avraham Eisenberg pulled off what he called a highly profitable trading strategy. He managed to drain over $100 million from a crypto exchange and then, he just went on Twitter and basically claimed it was all perfectly legal. But was it? So what did he actually do? Well, he used two different accounts that he controlled to trade with himself. He was essentially playing a game of catch with his own money. By buying and selling the same crypto asset back and forth over and over, he made it look like there was this huge amount of trading activity. This drove the price way, way up, and he then used that inflated price as collateral to borrow and then drain all the real assets from the platform. And that right there, that act of trading with yourself, that is the absolute heart of wash trading. It's a really deceptive practice that's been around forever, but it's found a brand new and incredibly powerful home in today's high-speed markets. Think about it like this. Let's say an art gallery owner wants to make a new artist look like the next big thing. At a big public auction, they get some friends to secretly bid on the paintings, driving the price up. To everyone else in the room, it looks like a bidding war, like there's this huge demand, and the artist's value just skyrockets. But in reality, no real sale actually happened. It was all a show. That, in a nutshell, is wash trading.
Okay, so this brings up a couple of really important questions. Why would someone do this, and who really gets hurt in the end?
On one side, you've got the manipulator's goals, right? They want to pump up an asset's price, create this false sense of activity, and, of course, make a ton of money illegally. In Eisenberg's case, he specifically manipulated the pricing oracle, which is just the system that tells the market what an asset's fair price is, so he could take out those gigantic loans. But on the other side, the damage is very real. It tricks honest investors, it completely erodes trust in the market, and it causes huge, real-world financial losses for everyday people. Now, you have to understand, this isn't some person frantically clicking a mouse anymore. Nope. This is all done by sophisticated automated bots that are programmed to carry out the attack. We're talking about malicious software, sometimes called bad bots, that are literally built for one purpose: market manipulation. They can run across hundreds of accounts at the same time, weaving this incredibly complex web of fake trades that's almost impossible for a human to see. The whole point is deception. The bots create this whirlwind of activity, making some obscure asset look like it's the hottest thing on the market. And that's what lures in other real traders. They see the activity, think they found a trend, and they jump in. And that provides the real money the manipulator needs to finally cash out their fake position. And the speed? It's just mind-boggling. High-frequency trading firms are working in double-digit microseconds. That's millionths of a second. Just to put that in perspective, it takes you about 100,000 microseconds just to blink your eye. This is the speed we're talking about. It's a battlefield where humans just can't compete anymore. So, if these attacks are all automated and happening at lightning speed, how on earth do regulators and exchanges even begin to catch these guys? Well, that brings us to the high-tech cat and mouse game of hunting the bots. As the manipulators build smarter and faster algorithms, the digital detectives have to keep evolving too. The old ways of just looking for simple red flags, they're way too slow now. So to keep up, investigators have had to develop a whole new arsenal of tricks.
A pretty good way to think about it is like those "I'm not a robot" tests you see online, the CAPTCHAs. The reason they work is because humans are, for now, still better than computers at spotting certain kinds of complex patterns. And it's the same idea in finance. Investigators use these powerful data visualization tools to literally look at the market activity. And sometimes human intuition can spot a weird pattern that a simple program might just miss.
So the hunt is really a multi-step process. It all starts with statistical analysis, just sifting through mountains of data to find anything that looks off. Then they start looking for what they call algorithmic footprints, things like a whole bunch of trades for the exact same amount or a sudden burst of trades that happen in milliseconds. And finally, they visualize that data, turning all those numbers into a picture that can make the manipulator's strategy just pop right out. All right, so the bots get caught. What's next? Well, despite what you might have heard, these markets aren't some unregulated Wild West. The consequences for getting caught are very, very real. You've got regulatory bodies like the U.S. Securities and Exchange Commission, the SEC, and they are going after these cases aggressively.
Their message is pretty clear. If a crypto asset acts like a security, they're gonna regulate it like one, and they are dedicated to rooting out this kind of misconduct. And this isn't just an American issue. The Commodity Futures Trading Commission, the CFTC, points out that this is a global fight. These manipulators work across borders, so enforcement agencies all over the world have to work together to be effective. And the penalties? They can be absolutely staggering. $920 million. That's the fine JP Morgan paid to the CFTC in a huge case involving manipulation tactics like spoofing, which is basically a cousin of wash trading. This was not a slap on the wrist. This was a massive signal sent to the entire financial industry. And these penalties hit everyone involved. We've seen fines for individuals go north of $25 million. And for the big institutions, as we just saw, the fines can get close to $1 billion. The message from regulators couldn't be clearer. If you manipulate our markets, you are going to pay a very steep price. So where does all this leave us? Well, it points to one inescapable reality. We're in a constant technological arms race. As the bad guys' algorithms get more and more sophisticated, the tools used by the good guys have to evolve right alongside them. This chase is far from over, and really, the future integrity of our financial markets is hanging in the balance.